Don't have that happen too much, but as long as they're able to get that and have that game plan rather than just blindly, I need to pay down some debts, they're not going to win that way. They're not going to succeed. And this way provides a clean, transparent way for them to succeed.
This video is brought to you by morethanrealestateagent.com, your #1 source for real estate merch on the internet. Use code YouTube for 10% off your first order. All right, everybody. Well, we're going to get started with my guest for today, Mr. Daniel Reese with One Real Mortgage. He has been so awesome to work with, and I wanted him. Every one of these office hours calls is not just about me. I've told each and every one of you that it takes a village to raise a great realtor, and we don't know what we don't know. So in this current market where things are shifting on a very regular basis, I don't try to know all things relating to the loan process for my clients. I send them directly to Daniel because he's going to give them the best and most accurate information in real time. But before we get going, I do want to encourage everyone, if you know a realtor that is out there and they do not have this level of support, family, connection, all of that accessible to them, let them know about Real. Obviously, those of you that found me, you know, I'm humbled and I appreciate it, and I don't take that lightly. And my goal is to empower everybody here to eventually have their own team and take the knowledge and things that you're learning from me and others here on the call today, and then use that to be a blessing to somebody else that is with a Keller or a Berkshire or EXP that's really, truly, the juice wasn't worth the squeeze that they are currently dealing with. So encourage them to be on these calls. It's open door. Anybody can be a part of it. We have a guest right now, actually, that's on the call, Leslie, who is thinking about making the pivot to Real. So I really want to encourage everyone to reach out to one other agent at one other brokerage to see if they'd be a good fit for Real.
The program that I'm about to go over is called Real Originate, which I think is phenomenal. And I've never seen anything like at all from any lender. I imagine soon we'll start seeing this because effectively it's a way for realtors to make money. And I mean, around the scenes, we legally can't pay referral fees, but truthfully, for all partnerships with lenders and realtors, like that would absolutely be the easiest way if we could, right? Where it's like, oh, will you help me with some marketing here or help me here? Rather than, hey, like if we close a deal together, I'm going to pay you. And we've effectively figured out a way to do that legally, of course. But with it, you do have to get a loan origination license, but you don't necessarily have to use it, so to speak. And just while we're on that and getting the presentation up, that is a 20-hour class, and the class is very similar to a realtor when you're getting that, where you're studying. The class is more of a joke, not that serious of a class, and the class test isn't serious, but then there's a very hard federal exam that you got to run on. That is extremely hard, but that's the only hard part of it. And it's all in about $500 to get it, and check with, you know, your respective states. But I'm fairly sure it also counts as CE on your realtor license whenever you're using it. So you can have a dual purpose on it. Let's go straight to the slides, man. Help me out, Marvin. Where are we at?
I got it pulled up.
Can you hit next for me?
Yes,
Let's
sir.
see.
Yeah, okay, I got it here.
Okay, so I think that's still accurate, but obviously some of it isn't. I do believe we're still at 20 states, and we're technically taking requests and putting them down. So that way we want to have every state. We will have every state. Maybe New York would be a little bit, you know, they're a little bit difficult to get into, but we want to have every single state to match Real, and we are doing so. But if we have heavy requests for either loan officers or for realtors being like, hey, I want to be a part of your Real Originate program, then we're going to, you know, effectively, if I have 1,000 requests in Tennessee, we're going to prioritize that versus 1,000 requests in Nevada or 500 requests in Nevada. So ultimately, if y'all are in these states, or if someone's speaking to you like, oh man, I wish they had that, let us know, because we'll definitely put it on the list to make sure, and tell, you know, send out an email and let them know when we're in there. Clearly dated, as it has 18,000 agents in our network. That is 20 now. Ultimately, so in our scenario, we have external loan officers. So with that, that would be you in this situation, to where you are technically, legally, a loan officer, and you'll be able to, you won't be W-2, like all benefits and required to work full-time or submit deals, anything like that. You'll just be able to send a finance application directly to your client. And whenever they fill out that finance application in your name, then your internal loan officer, which I'll use me for the scenario, where we get it and we split our commission with you, because now we're partner loan officers, both working on the same deal. So it's legal for us to split our commission. And that's effectively the loophole on how we can get around that. And ultimately, I mean, I'd love to work with all of you, absolutely. But if you do have your favorite loan officer, you know, you're rolling thick with someone for 20 years, I get that. And I mean, that point is where set up a Zoom with me and let me tell them, you know, why I want them to come here. If you can't beat them, ask them to join. And there's more benefits for them just joining than just you as well that we'll go over. But effectively, that way you can still split your commission, but you're able to bring on, you know, Bill, your homie, rather than me. But I'll gladly help. And I think someone was Texas. I have a fully licensed assistant that works with me as well. And they're, I believe they have Texas and Arizona. I have Florida, Georgia, and North Carolina. But I actually just added North Carolina because we have Brad Bass. So I'm not sure if you're familiar with him, but him and Heather and Brad Cook were telling me to get my North Carolina license. And then one of them was like, hey, I'm doing a 160 unit development. I want you to be the, you know, preferred lender for the entire construction. And I was like, okay, I'm going to get that license. That was enough for me to jump on there. We can go to the next one. So external, that's where you just send the finance application, and effectively you're finding your client and you're getting all of their information, which the finance application is doing it for you. So that's, again, how we can justify. You will get paid 50 basis points or $500 per 100,000 in loan amount. Now, it's not exactly on the 100,000. It's just, that's a rough estimate or an estimate of what the 50 basis points looks like. But you know, if we're at $400,000 loan amount, then you're going to get $2,000 separate of any commissions that you get. And it doesn't, I know with our update with NAR, there's a little section that you have to click and you're like, I'm not going to get any other commission besides this. That we've already verified that's specifically for realtors. This is a loan officer. It's two different jobs. So you will be able to get this on top, even though you're filling out the newer form saying you're not going to get any other commission. Completely different. And we're able to do that. And then the internal person, I mean, effectively, that's where I would pick it up and run, just like if you're not licensed right now today. Like I would go ahead, I would do a 3-way talk with you guys, or do a meeting and, you know, do a Zoom and go over what's our scenario, what are our goals, our needs and everything. And I would collect all the documents and everything. Like literally, you don't have to do anything. Some realtors want to. So we do have 2 different onboarding classes, and some realtors are like, you know what, I may be interested in going like full-time loan officer at some point and doing this. And with that, we do have a separate like onboarding that gives you more information. And I do have one of those types of realtors that's currently paired with me. And with them, we literally, she sends it and then I just screen share with her whenever I'm going through and I'm just, you know, speaking out loud on what I'm doing, where it's like, hey, I'm requesting this document because of here. We're training on each of those. And she's like, okay, like I think she's wanting to retire from real estate in 5 years. And she's like, you know, I'm still going to have a ton of clients. So I probably still want to do this, but I don't want to drive everywhere. I don't want to do all that. And I was like, okay, that makes sense. And on that $500 per 100,000, that's not just purchases, that's refinances. So you're able to go through your book of business for the past year or 2 years, and all of those folks, if they're not ready to buy, then, you know, we're currently today, and especially after the Fed Reserve meeting next week, we're moving into a refi season again. But you know, if you're calling them and you're like, hey, just want to check up, they're like, oh, well, I'm not buying a house. You can then be like, okay, well, how would you like to lower your rate, you know, from where you're at, and be able to grab that. And then you still get paid again, where you're just sending a credit app. And we have a system too, where you're able to upload your clients and you're able to upload like their interest rate, and it'll automatically ping you when it's like, hey, there's a material value to doing a refinance, you should reach out to your client. So we're able to set that up too, but refis and purchases.
That's pretty awesome. I did, before you continue, I did some quick math, and we have 2 quick questions here. But on a standard $500,000 purchase, for example, our 3% y'all pays 15 grand. So with this program, you're looking at another roughly $2,500 commission for doing the same amount of work. So I think that's incredibly powerful, especially if we're worried about, we're representing the buyer and we're not going to get our full 3%, and maybe the buyer can't afford to add that extra percentage or whatever we decide to adjust down. You're still going to make your money multiple ways. Now, Emick had a quick question, and then Shavatika, and if you guys just make them real quick so that he can get through his whole presentation. Emick, go ahead, unmute your mic.
Okay, so the question is, you have to get your mortgage license to be the internal LO, and then you work with the external, or is this like, because how the process goes for me right now is I just send an email to my mortgage loan officer, and then they basically just contact the client from there. So this is basically me doing it right up until I pass the loan over to you, or I got a little confused.
Yeah, so great question. Honestly, effectively in your situation, just how you detailed it, whenever you're sending an email to introduce to a loan officer, the only difference you would put is, here's my finance application, and have that link at the top. And then they would do your finance application. So therefore, you're a loan officer on their loan, and we're able to split commission. And I will say, I need to make sure I mention that the reason why would I want to split my commission? One, I think it's fair for a lot of situations, but also they generally want to see 10 homes sold over 12 months or $4 million in gross. So effectively, instead of, we're trying to dig our heels in, right? Like, well, with money where, okay, like instead of getting 1 out of your 15 buyers this year, like even if we come up to 7, they're not going to be like, no, you don't get it, but honest intention of it, I'll take 7 over 1 for sure. And I'll gladly split my commission and make sure that y'all are getting paid for that as well. And especially, even if you only have 5 buyers, but you find 5 refis in there where it's like, dope. Like, I wouldn't have found those refinances whatsoever without them. Most of the times I wouldn't have found a buyer without you. So I do feel like it's rightfully deserved. It's just legally we can't unless we have this license. And, luckily this is literally no one's else doing it, but we do have pretty expensive attorneys that were on our file and the board of directors. So it was heavily vetted to make sure that all of this is, black and white, clear cut.
Awesome.
Did I answer your question with that though?
Yes. Yes. So you do have to get your loan officer license in order to participate in the commission sharing, basically.
Yes. The only other way to cut around that is if you have a team lead situation where I have one team lead, and again, this is where compensating factors come in. They don't do any purchases like their listing agent, but they do have 12 folks on their team, and the folks that aren't getting licensed, they just put their team lead who is licensed as a co-sponsor, and their team lead is as a co-agent, but not getting commission on the buying side. And the team lead is sending their application, and effectively, I believe she just takes that money and puts it in a pot and buys leads for them. Like, ultimately is what she does. But effectively, it would be up to the team lead on how y'all split that. But that's the only real workaround that you're able to do with that. And it couldn't be directly, like, we wouldn't have any contract to say, oh, this money will come to you. Like, we couldn't do that. It would just be going to your team, which still can help everyone flourish.
Absolutely. Great question. Great question, Emick. Shavatika, go ahead.
All right. Well, I really love how just the math makes sense. My question to you is, the external loan officer training, is that the same as internal in case you wanted to go full time? How does that transition from external to internal work as far as education is concerned?
Great question. Yeah, as far as like your legal, like getting your license and everything, none of that is going to change whatsoever. You are a loan officer. The difference is we have two different onboarding, and one onboarding where it's just like, hey, I just want to send apps. I ain't trying to talk about no mortgages. All right. Which is totally, I thought every realtor was going to do that anyway. So we were thrown back, and we just started different onboarding classes last month because there were realtors that are like, well, I want to know more. I want to be able to do this. And I was like, oh, okay. And there is a separate where you can join as if you're being hired full-time loan officer, to where they're showing you, hey, here's our 17 different lenders that we have. Here's their pricing portals, and like able to go into it. I will say with that, you're still going to want, like, if anybody has a loan officer, and unfortunately I've had this like 5 to 10 times, like in the past couple months, that literally has been in the business for 12 months, maybe, but less than 12 months. Truly, we're not adequately prepared to get those people the best. And that's just honest on that. Like, if you were like, man, I really want to go full time, it's going to be a longer drawn out like training that we'll absolutely do. But if there was someone who's like, no, this person, they just got their license, they need a place to work, we're just not set up to really bring someone from 0 to 100, especially if there is some more difficulty with the cloud-based brokerage. And a lot of times the biggest headache is you have a question that can be answered in like, 30 seconds or 60 seconds, but you have to reach out. We do have like a team chat that even our external loan officers are able to join for Slack, and you're able to pop a question there. But like, if someone's trying to get me and I was directly training them, then they're going to wait at least an hour until we get out of here. And then I got calls lined up, and then the text message I missed. So like their 30 seconds can turn into 2 hours. And as you know, clients are a little time sensitive to where you don't really want to mess that up. I mean, I know that we are planning on adding more facilities for training for like people that are gung-ho full time, but we're able to get you set up like, hey, do the whole onboarding as a full-time person. And then I'll personally jump in there with you like anytime we're doing deals and just be like, here's what I'm doing and here's why, and here's the questions we should ask. So that way you can get a better understanding of exactly why and how we're doing it.
And I think it keeps the main thing. I mean, obviously we are all here as real estate professionals. And so having that license and just assuring essentially that I'm going to make an extra 50 basis points on a transaction, and or having a loved one or a spouse, whatever the case is, that gets their full-time real estate license. That way I focus full-time LO license. That way I focus on the real estate side, but I have my LO license as well. It just gives you a bunch of different options to essentially clone yourself into different areas of expertise. So these are great questions. Absolutely. Here, and I'll move on to the next page of your slide here. You can rock back out.
Yeah, I mean, ultimately here, I just ran some scenarios where, you as a realtor or external loan officer, I've looked at $300,000 loan amount, which is literally lower than the lowest average. I think 330 is, but I use that for Georgia. I used it for clean numbers, and all of the scenarios I'm running, I wanted to be not, like you could get here, like you could make $1 million. Like I want to be like real, like this is exactly what you could be looking at. So I ran it with 12 deals at 300,000, and then I ran it on someone who's pumping it up and they're putting 3 deals out a month, to where that would look at $18,000 extra a year. Or if you're really pushing it, or if you have a ton of refinances coming in too, to where you could be over 50,000 just based on getting your license, sending over the application, and getting paid on the same thing you're doing anyways. Like there's really a 1 link difference effectively. And some classes and all that, but that's fine. Those are easy. But yeah, the next part, earning income from every closing. That's where refinances come in. Ultimately leveraging yourself for your go-to. Even if you're not going to be full-time loan officer, you're going to know more about loans, and you're going to be much more, you have to pass the federal exam. So you literally have to know about it. But that exam's, again, kind of similar to realtors, where it's like, I know about riparian rights. Like, how many times have y'all used that since you took your test, though? Like, there's some stuff on the test, right? Like on the test, there's really stuff that's like, okay, like how much is a fine if you do something illegal, where it's like, that's not going to be useful in every day. Or what year did they have the law like to make women treated equal? It's like, 1978. Like you're not actually going to use that. So the test is kind of hard to be hard, where it can be summed up to don't be a racist, treat people equally, even if they're a woman. Like that's really what it is. And then fines. So it's just a memorization test. And we do have is it WhatsApp? I believe it's a WhatsApp group where we have, I think like 50 people are in it, but ultimately anyone that's like, oh, I'm taking the test or I'm going to join the class, we're add everyone or invite everyone directly to that group where we have a couple of different seasoned people. We have the CEO of Real Mortgage in there. And then if people just have questions where they're like, oh, like, how did you get your NMLS number? Was the last one I remember. And like people jumped in. So we do have a community that's helping each other. And then we celebrate when they pass and move on out of the group as well.
And I'll get that information to everybody. I'll put it in the Google Drive, in the Partner Hub. I'll get that information from Daniel if anybody's interested in tapping into that. And Aaron said, is it similar to the real estate exam? It's a lot easier. From what I've heard, it's way easier than the real estate exam because like Daniel said, there's a whole lot of aspects to real estate specific to Texas where you are and Georgia where most of us are. But loans are loans across the United States. So it's way more condensed. I've heard folks say they study the material in 2 weeks and pass it. That's just how, I don't want to say it's easier, but it's not as much as what your real estate license entailed because it's just finances. So great question. Hey, if you've made it this far in the video and you are a real estate professional, consider partnering with me here at Real Brokerage. Pay nothing per month, get a fantastic split, and you have the opportunity to build a business through revenue share and stock purchases. Book a call at the link below in today's video, and I'm happy to have a conversation on why I was able to grow my business exponentially by moving my practice to Real Brokerage. All right, back to the video.
Okay, so here's the next piece of it. And still, again, I saw Shavatica's question real quick before I hit that. No, we do have discount codes that we have in WhatsApp, and we have partnerships with licensed companies. What's that?
The CE shop, I think is one place, or it's a few.
Well, we also have, I can't believe I'm forgetting their name. It's literally who I went through and got all my license. Mortgage Educators is the name of them. And we have discount codes like specifically with them for like any CE hours or specific state tests or just all around tests. So we do have it discounted. Ultimately, with everything in, like doing, and that's an online course, right? You have an option to do a 3-day, 7-day, or 14-day course, and then you're able to take the test. But if you do that online course and then you pay for the actual exam itself, and then you pay for fingerprints and background check and send it, like all in, it's about $500. So you're looking 200 to 300% ROI if you do one deal, where it's like, you know, I've had some people tell me like, oh, should I get my realtor license? And I'm like, I don't know if you'd be a good realtor, but you know, if you're planning on buying one home in your life, you'll probably be able to break even like for the time spent, where it's like, you got one deal or one refinance, you're going to come out ahead on that initial investment for sure. And honestly, having that tool in your belt where, I mean, anytime I talk to potential clients and they're like, oh, like you're a realtor. And I'm like, absolutely. But also I do the loans. And they're like, oh, I'm like, and I'm a registered appraiser. And I'm like, okay, like I don't ever do no appraisals or anything like that, but it's still like, you know, a badge without saying, you know, top one in my 10 people team, like a real license badge to have it.
Someone asked, what if the real agent is already an NMLS licensed? They're already a loan officer.
Let's go. That's it. Let's go. I can send the link and we get you signed up. I mean, that's quite easy. Like we can jump right into it. If you're already licensed and everything, we're able to get Samir's the CEO. If you haven't met him yet, but he's able to send out like the welcome packet and all that stuff, and we can get you set up. I believe, I mean, if it's not too late, I think August 8th is the next orientation that they're doing on there. But yeah, if you're already licensed and everything, want to come hang it up, then we can do it quick and get you in there.
All right, that's awesome. All right, let me keep going here. If you want to talk
level up, absolutely, I do. So level up is legally not able to be called rev share, but it's a coaching and mentoring bonus that you get. Now, again, you have to have your license with this, but earlier when I mentioned the scenario of your good friend Bill, that you only want to work with him as a loan officer. So that's where I was saying, not only can it be for you, you're able to get Bill and put him in your downline, a originator in your downline. And the kicker on that too is we don't have caps on yearly caps for any loan officers in your downline. It's quite literally an infinite amount. I ran this just to show, like, we have 5 tiers, and the first one's automatically open. Then at 5 folks, 10, 15, and 20 are the different tiers with that. And not necessarily just full-time loan officers. Like, if one of you partner with me, even though you're a realtor, an external loan officer, what have you, that's still a person in your downline. And for reference, I mean, I haven't done any really recruiting. I've spoken about it for sure. And it's been about 5.5 months that it's been out. And I currently have 10 folks, like, where I'm at. And I like to share my screen on this part, but I know I can't, but I wanted to show you truthful numbers. And with it, I'll still tell you verbally once we get done. But let's go on to the next one.
All right.
So it's tier 1 is 12 basis points, and 2 is 8 basis points, and 3 is 3 basis points, and 4 and 5, if you have people paying you from there, that's dope. It's just free money. I don't even write that in there. But ultimately, for every $100,000 your loan officer that you brought on closes, not just with you, like in general, with anyone at all, period, you get $120 for every 100,000 there. And with that, I mean, we have 30 loan officers, and we have over 20,000 realtors, like, just with us. And we're not, like, for any full-time loan officer, I work with Keller Williams agent, I work with EXP agents, I work with literally, we have no restrictions to only work with real agents either. So they're able to bring their entire book of business. But if they're moving slow at all, then they have the opportunity to meet tons of like-minded people. And truly, whenever I tell people, like, I work with people I like, which is dope that I have the luxury to be able to actually do that. But like, anytime I see someone calling my phone, normally I'm like, what's up? Like, it doesn't matter if it's a deal. I'm saying what's up anyways, because I have agents that call me all the time. They're just like, hey, about this contract, I have a question here. And it's not even loan related, but I'm like, yeah, I got you. I was all about that anyways before I brought my license over, like my loan license over to Real. That's why I personally joined Real, is because I wanted the collaboration. And my personal mentor, Greg Goad, I wanted to learn how to do social media the way they were doing it and utilizing it. And I mean, I'm definitely gone from like 400 Facebook friends to 6,000 followers. And it's just been incredible, where that's 100% anybody I can help. I think that truly Real as a broker has so much to offer, and as a lending company. Boom. So again, I wrote these numbers really baseline. This is bare minimum stuff on here, to where I put a full-time loan officer should have roughly $300,000 submission, 1 per week, and only 3 out of 4 of those close. Realistically, I have a much higher closing ratio, but again, I'm trying to keep it low to be like, hey, these are real ascertainable numbers. And if you have your loan officer that you bring on under there, going off just those numbers, you would be looking almost $1,100 a month that you would get on rev share. And on the next slide, this isn't capped. So on here, I got, if you have 10 LOs doing the numbers I'm doing, I put that nice little $1,100 with 300,000, 4 submissions, only 3 closings. But like what I did last month, the person directly above me made $3,500 off their rev share, and no split deals like a loan officer at $3,500. So quite literally, if you have 10, I'm not like a super producer. I'm in the top 10% nationally, but like just barely. Like I'm like 9.8 or something like that. Like I'm definitely not the best in class by any means. But with that, if you have higher producing loan officers that you put under there, I mean, I ran this scenario with, what if you have 10 of those at $3,500 a month? Then you're talking about over $400,000 a year for rev share. Sorry, for coaching bonus. Like it's phenomenal. And generally, this is where I actually, because this all sounds good, but now that it's been 5.5 months, I can show proof of it. But unfortunately, I can't figure out the screen share. But if any of you want it at any point in time, I'm glad to meet up with y'all, period. But this is 5.5 months since we've started the program. And so far this month, I've made $4,500, and I'm projected to make $8,000 where I
On
have,
autopilot.
yeah, 100%. And I mean, ultimately we have like producing team leaders that like jump in if you have questions, like they're a manager tier type deal that you're able to jump to. And I declined that request. They asked me to take that, and I declined it specifically with every person that's in my downline goes to the same manager that I want managing me. So that way I can still be a coach and still answer questions. And if I'm not, you also have Mr. Manager. So that way it wouldn't be one person. I want to make sure people have multiple sources to jump to.
Absolutely.
But with that, I mean, on the 4,500 so far this month, 3,600 is from one LO. And I'm averaging right about $6,000 a month that I'm getting from that coaching bonus. And I mean, we're not even a half a year into the program. And literally, like, we had a meeting with Sharon, last week. And he's like, hey, I'm going to do a huge announcement and everything. And literally, Samir and I were like, no, we're not ready. We're not ready. Don't start yelling that, bro. People listen to you. Like, we don't need you to yell that yet. We still want to make sure we get everything clean, because I mean, this is something that's never been done before. So we're making sure that we're doing it right. We're tweaking our onboarding, and jumping in. But folks that are going to sign up and jump in today, I mean, this is a second chance. I mean, imagine joining Real as a realtor and there were 2,000 agents and you had that ability. This is completely uncapped. So, I mean, I think that probably 60% of our brokerage plus will probably be signed on in the next 3 years, but we're able to start at the very top right now. And those folks are going to sign on anyways. It's just a matter if they're going to fall under your tree. So it's absolutely killer.
I believe it's important to make moves. Don't make excuses. I feel like a lot of times we hear a lot of this gloom and doom news. We're coming up on election season. I'm not political, so we ain't going to get into any of that. But in our real estate world, there's a lot of gloom and doom about August and the changes and all this and all that. And I just said, as a person of faith, I don't put my faith in what I see on TV. What they say, believe half of what you see, none of what you hear, or the other way around. So all we can do is be proactive versus reactive. So that's really what I'm hoping. I saw somebody leave a comment that they're going to jump on this. I'm jumping on this because, again, if I have a situation where I'm not getting compensation from my buyer, I still want to make sure that I keep the lights on through any means necessary. So this is awesome here. And then Daniel, I want to open the floor for questions, but I also wanted you to talk about as well during this call, and I want to be respectful to your time. If you wanted to, I don't know how many more slides we have here, but also want to leave room to talk about how you're getting folks pre-approved and how you're getting credit scores bumped up for one of my clients that you did that for, because I think that's also going to be helpful for this conversation. But
absolutely. I think that's the last slide, to be honest with you. I think the next one's just my information. So leave it up there in case anyone wants to grab my phone and email and all that. But we have 17 lenders at Real Mortgage, and we're a broker. We're probably going to be correspondent in the first of next year, but we effectively get paid by the lender. We don't charge your client, and we have contracts with the lender for set pricing. And we have 17 because, obviously we're going to price shop a bunch of them against each other, but then we also have a lot of different programs. And if we don't have it, and it is something that you're seeing, tell us, because like a construction to permanent wasn't something we had a couple of months ago, like 6 months ago. And we just had realtors like, hey, I need it. And we're like, well, if they're asking, let's get it, right? So if we don't have something, but truly, I think the only things that we don't have is just straight up land, and then commercial for 8 units or 9 units or higher. I think we're actually able to still do a loan up to 8 units and not consider it as a commercial. We also have multiple down payment assistance programs, to where we have one that's conventional at 3% down, conventional program where they give a grant for 2%. So your client only has to come with 1%, and the pricing is not affected. It's like absolute great pricing. Only goes up to 350 max. Great product. We have another one that's FHA, and that one has like, you're getting a 7.7 no matter what your credit score is. But again, they pay all 3.5% for the client, and it's no repay. So you're getting that 100%. And I think you only need like a 620 or 640 to get into that one. And if they're not there, then we have a credit upgrade system is what it's called. And effectively, we're able to, hyper specifically able to say, hey, pay $178 on that American Express and your credit will go up 13 points. That'll hit us at 640, and then we'll be able to qualify for this. So anytime I tell realtors, like anytime someone's like, oh, I'm working on my credit, I'm just going to pay some credit cards. Like at that point, like, hey, stop. Like there's no cost to it whatsoever, like for the credit application or the upgrade, no cost whatsoever. And truly, a client can be easily confused by credit, as I am after years and years of doing this, but like they can pay off a credit card and for paying it off, their score goes down. But if they pay it down to $5, their score goes up 27 points. So quite literally just taking a look at it and seeing exactly what it's going to be. So you have an exact game plan, whether it's going to be 6 or 12 months, or if it's like, hey, I want to buy next week, like we're able to get that, and we're able to get the receipts for whatever their game plan is. And we send that directly to Experian, TransUnion, and within 3 days, we have their credit report new, like everything reported, their new credit score, all of it updated, rather than waiting a month or 2 or 90 days, what have you. Like we're able to do it fast. And we've even done it where someone's had like a 680, they're perfectly fine. Yeah. But we lock in the rate today and we're like, hey, just take a look at it. If you get to 720, it's like $3,000 less closing costs or what have you. And we'll look at it and be like, oh, like if you pay $1,500 here, then you'll get $3,000 less on the purchase of your home. So, that's a $1,500 win. And anyway, you still pay off your bill. So let's roll that. And we can retroactively use the new credit score that we have and apply it to our original lock, and then go back and reduce their locked rate cost on it too. So it's a really, really clutch item to be able to use.
That's awesome. We had a question come through here. It says, can you do that as an internal LO as far as the game plan and creating the plan and etiquette?
I haven't had anyone ask me that, but I don't see why not. I hope I'm not speaking out of turn on that, but I don't see any reason why you wouldn't be able to do that.
Okay.
I feel like yes. I'm going to go with yes. Yeah, you do that. Okay. I would allow that for sure. And it's not that difficult either to plug it in. Effectively, like we registered the loan and then we have the lender go ahead and send us all of it. And they normally get back to you at least within 24 hours. But I've had a lot of times they're like 2 hours. And then whenever we send it back to the lender, like it's a fairly easy process. So I don't see why any licensed individual wouldn't be able to use it and go through it.
Okay. And what are some of the things that you're noticing, Daniel, that's keeping individuals from getting pre-approved or causing a wrench in the transaction process when they get going? What are some of those things?
The big three really, right? Like is my credit is no good. And that's something where so many folks have said that. And I pulled up a 680 credit score and I'm like, yo, like, what do you mean it's no good? Like we're completely fine. Like clients don't necessarily really know what their credit is unless they order their specific report, but all of the FICO scores are different, and being able to explain that to them, that's why your Cap One app and your Credit Karma app and like all of those have different scores because they're graded differently. And you can have a 600 on your Credit Karma and it'd be a 700 when we pull it. So truly just having that opportunity, but credit is a big one. A lot of first-time home buyers, down payment, like that's a huge one. And that's why we added multiple different down payment assistance options that can help out there, because that is still big. And, currently I think we're going to change, but our current market right now isn't exactly, hey, I just want to upgrade, right? A lot of people are getting new homes out of pain. They're getting new homes because they got divorced. They're getting new homes because they don't own one and they gotta, so they don't ruin their future. So it's just like, that's that time. But you don't see, like, unfortunately, all the folks that would be, moving from that 400, 500 to that 750, they're like, I got 3% interest. It ain't happening. You ain't taking that from me. So truly, a lot of them, it's where we're seeing those pain points. And that's where that down payment can be a problem there. And then the third one, really, other than that, those are kind of the two that I would say that are actually holding it up. And then I would say also I've seen the most business out of my most productive realtors off of YouTube and off of relocation, specifically on YouTube, because that seems like there's a plethora and a very thick market of that, since people aren't, again, feeling like, oh, let's just upgrade our home. Like if it's $1,000 a month to just upgrade it, it's not as willy-nilly as it used to be. But folks that are getting job offers and have to relocate, they got to buy a home. And generally, like whenever they're looking up homes, if your YouTube's popping up and you're an expert in your area specifically and doing interviews with the local, baker, the deli owner, right? And like, hey, I know a bunch about Cherokee County, Woodstock, Georgia. That way, I'm the expert. So someone from Texas can look over there and be like, man, I'm going to call him. I'm going to call him. It seems like he knows that's where I'm moving anyways. And he's over here walking downtown streets of it. Cool. But that's where I've seen the most recent success in the past year. And then really credit and down payment have been the biggest hits. And just not knowing that, one, you can build your credit. And then two, that there are down payment options. Because, the conversation can be as short as, I'm not ready, my credit's not good, to literally, this isn't normal. Normally it's like 60, maybe like 40 to 80 points or something. But literally this week we had someone that went from, I think it was a 580 to a 740 credit score in 3 days. And they just had, what is it? I'm drawing a blank. They were not a co-signer. Well, we did that, but they were on their mom's credit card or like a family member's credit card, but they were authorized user. It wasn't even their credit card. And they're like, hey, that has 7 late payments on it. Like, just take your name off as an authorized user. And that alone brought them up 100 points. So it literally cost them no money. They just didn't know. And if that conversation was like, oh, I understand about your credit, cool, we'll talk to you later, would have never happened. Now the dude's under contract in less than a week because they had that conversation and literally went out. Like, he already had the house that he wanted in mind. So like, just being able to have that conversation with your client and just to let them know that there are options, because there's stuff that they don't know. I mean, a lot of times I see people that don't have a down payment. They don't know where to go on any of that. And then they have 200 grand in their 401k. And I'm like, oh, well, that's interesting. That, well, I don't want to pay a penalty. And so far, 100% of the time, I'm like, hey, contact your HR. But if it's for use of a primary home, you don't pay a penalty. You actually take a loan out against yourself and you pay yourself back. And it's been like 100% of times. And that's honestly probably good for 1 to 2 clients a month with just me speaking that to them, where they think they have no down payment. And then they realize they have $200,000 now, where it's like, oh, wait a minute. Like, I can use that. And I don't have to pay before it's early and pay taxes on it. It's like, no, you just take a loan. You're not pulling that off. You can take a loan off of it. And whenever they see that, like, just having that conversation and being able to go through it and to look at options, clients don't necessarily know options. And especially, they don't want to talk to you if they have bad credit. No one wants to tell you that, right? We don't share our losses. Like, we don't want to share when we're doing bad most of the time. We don't have that vulnerability. So whenever you're able to actually dig a little bit deeper and be like, hey, like, I got programs, like, I got a way, like, just let us look at it. I'll shoot you straight. I mean, I'll tell every client, like, if you can't get approved or if it's going to be 6 months, I'm not going to be like, well, maybe, like, that's it. Here's our game plan. It might take us 6 months, but now you have the answers and you know exactly what to do. And we're solid. I'll talk to you in 6 months, and don't have that happen too much, but as long as they're able to get that and have that game plan rather than just blindly, I need to pay down some debts, they're not going to win that way. They're not going to succeed. And this way provides a clean, transparent way for them to succeed.
I love it. And we had another question, and we'll open the floor for 2 more questions because I want to get you guys out of here at the top of the hour. Talk through the pre-approval process. Question came through: do you pre-underwrite for pre-approval? So when you do the pre-qualification, for those of you that don't know, that's step 1. I don't take a client on a showing unless they are actually pre-approved versus pre-qualified. But can you talk, Daniel, to the difference between the two and what you do differently on a pre-underwriting standpoint for actual pre-approvals?
Absolutely. With that, I'm actually in the same boat. I don't do pre-qualifications at all, especially like as a realtor. Like, that means nothing to me at all. Like, oh, you told someone you have an 800 credit score and they said, yeah, you can probably buy a house. That's what that means to me. Like, okay, cool. So I literally do like a straight up pre-approval or a verified approval, as we do have a lender that will send it to an underwriter and they'll go through. So if I have, generally I don't need that, but if I have something where they've only been there for 1.5 years and it's commission or bonus, it's really heavy on their income and there could be some weird questions on it, Those are folks that I'm like, hey, I think you're good. You're pre-approved. I'm writing that letter. I'm going to go ahead and send this to an underwriter, like straight up have them write it on a house that's not real. And then when they're like, oh, okay, like we're approved. Awesome. I'll just change that house when I get a contract. And then that jump starts them too. That's how you get, 10, 14-day closes when you already have everything done. But on a basic level, I'll generally run through on the pre-approval. And I mean, I get your last 30 days of pay stubs. I get your last 2 years of full taxes or W-2s, depending on where they're at. I get bank accounts and proof of funds on everything. And then I actually pull the credit. We do have a way to pull soft, but to do any of the credit upgrade in the game plan, it does take a hard one. So I always just mention that to them because, I mean, even if you're at a 720, it doesn't hurt to get to a 740. Like, let's just see type deal. So I kind of offer it to everyone. But yeah, I fully vet and go through it. And I also have an assistant, Nick is his name, and he's licensed. The one that's licensed in Texas and Arizona, he's also licensed over here, and he's able to run through and go through all of those. And he used to have his own company where he was also the processor for everything. So he like goes and buttons it up, and he's a veteran. So he's hyper familiar with VA loans as well to help there. But he'll go and double check anything. And even if I'm not there and they send in the application and I'm doing this Zoom right now, quite literally, Shabatica and had a client. I was like, hey, do you want Nick to give him a call while we're in the meeting? And she's like, oh, it's not going to be open till, he's not going to be free till after the meeting anyways. I was like, okay, bet. And like right now he's going through and going over documents that we need with a client. But we have also, we have a processor that works with the underwriter that helps out on the loan officer side as well. But we have a solid ops team. Not everyone has an assistant for sure, but it's definitely necessary for where I'm at. And it's a life. It's a blessing, truly, truly a blessing.
And you can close as quickly as 14 days, Daniel?
So we do have, I think the fastest one I've done was 7-day closing conventional.
Wow.
My next best impressive was a 9-day VA loan that you cannot order a rush appraisal on, which I was like, what? And it was like literally the perfect client too, because they had a appraisal go bad or something went bad with the first house. And then we were 2 weeks behind on our schedule and they had to move to Georgia and they had to get their kids in school. Like school started in 2 weeks. So like, they're on this deadline, had to start his new job, like all of that. And I was like, I'm going to just do it as fast as I can, guys. I can't promise anything. And literally we closed in 9 days. And I was like, perfect. Like that was some prayers, man. Like you're the one I wanted to get this, right? But generally speaking, I mean, I always ask for 30 days. I truly do, because that way it's so much more stressful. I specifically ask for the verbiage 30 days or sooner. So that way we're all able to agree and change it without even have to do an amendment. Cause I mean, like I had someone who's clear to close 3 weeks early this week and I'm like, hey, y'all want to close next Tuesday? And they're like, yeah, everyone agrees. Cool. We don't have to wait till August. Right. But we also have, I believe the name of the program is Fast 14. And there are some stipulations, like you can't be self-employed and it has to be conventional. Maybe FHA works too, but with it, it's a literal guarantee that we'll have a 14-day clear to close for your client, or we'll pay your client $2,500 if we don't live up to that, like straight up. So we literally put our money where the mouth is, and we're able to be extremely fast. And if we have a situation or if we have to save a deal, any of that, absolutely. I generally still try to have 21 to 30 days, depending on the situation, and then 30 plus if we're looking at bank statement loans or DSCR loans, because those can be a little bit more elongated when you're going non-conforming. But we do have the ability to make it happen.
And those are loan products, y'all, that are out there for folks that, again, as he mentioned, they may have fluctuating income. They may be entrepreneurs, business owners. It's great to know that Daniel has the full gamut of options. And I want to leave the floor with one more question here, because we are past the top of the hour. Emmett, go ahead. What's your question?
Okay. I was actually going to text it, but so right now, sellers and buyers, especially in Atlanta, are having a hard time selling their properties in HOA communities. And there's actually quite a number of mortgage brokers or whatnot that don't know how to navigate that, especially with Fannie Mae changing their guidelines earlier this year. So have you come across that? And then also, like, how did you handle that if you did? Because also I'm in this situation right now too, so with my client.
I mean, I would definitely kind of want to elaborate with you one-on-one and understand your situation, because I mean, I've dealt with a ton of HOAs, and I do Florida, so I do a lot of condos that are a lot stricter because they just changed all their development codes and everything from, you know, a couple years ago when one of those giant towers just collapsed. They changed all the rules, so they're like hyper specific on everything. But I genuinely haven't run into, from what I understand from what you said, I haven't ran into any issue like that. We're really like very good about getting, you know, just directly being in touch with the HOA. And generally I try to be in touch with the HOA like day one of due diligence. If they don't already have, you know, their community disclosure and everything, I want to speak to the actual HOA person. But with that, I mean, sometimes they're slow than I'd like, but I haven't had any issues. But I'd like to know about your situation and just see if I can offer further insight if I know more about it.
Yeah, it's mainly the water deductible per unit is high. Fannie Mae will not back a loan in any HOA community when the water deductible is high. Also, they won't back a loan in a community with delinquent, with low operating expenses in their reserves. I think that's kind of standard that they weren't really doing that. But there are some, I guess, mortgage brokers that can find a workaround. I don't know what the workaround necessarily is. But
Sure.
those are the, you know, like, those are kind of the challenges we're going through. It's just a lot of HOA communities in Atlanta are not eligible for FHA or Fannie Mae backed loans.
Okay.
I mean,
so
Freddie Mac, conventional Fannie Mae loans, all of that.
So we do have programs for that situation. I mean, ultimately, if you have, I forget the number, maybe it's 30% or more that are just straight investors that own it, or if you have delay, like they're delinquent on some of their HOA dues. I think if it's 50% of the community is delinquent by 30 days, and then specifically, like they don't have reserves for what they need to do. Any type of situation like that is considered an unwarrantable condo. And with unwarrantable condos, we do have multiple different situations we can do. Almost all of them require big money down. I think the lowest is like 15%. I'll have to double check on it, but the pricing is a lot better at 20% down, but we're able to use, I mean, we have DSCR programs that we can use with it. We have bank statement that we can use with it. And we just have like individual, like straight up investors. Like we even have down to where it's backed by treasury bonds, like to where we can work around that. They're all unconforming, unconventional loans, but you know, when you're in that situation, it absolutely will get the job done.
Appreciate you, Daniel. And let everyone know, Daniel, how they can get in touch with you. One more question was the school that you went through to get your MLO license. In addition to that, how can folks get in touch with you? What's the best way to tap in with you?
I'm going to put that direct link for y'all in the chat for the school I went to. I mean, truly, like on my email signature, it specifically says that I'm able to work and set up an appointment anytime from 7 a.m. until 6 p.m. or 7 p.m. Actually, I think it might say 9, to be honest with you. I need to double check that. Yeah, I think it's until 9 that I have on there. And I specifically have it where it's like, hey, the best way to intro me, I personally find a warm handoff to be just a text message with all of us, with your client, introducing me, because ultimately, I mean, I answer unknown phone numbers, right? But we're realtors. But, you know, other consumers that don't need to, they look at unknown phone numbers and they're like, nah, I'm not going to do it. So ultimately that gives them a chance to where they can save it. And it gives like the grace of, here you go. Like I'm literally handing you, this is my partner who's going to help you. Unless you're directly, I mean, actually still that, even if you are like an external loan officer, I still think that's generally the best way, unless the client is specifically saying, no, I only do email, or, they live in a different country and they can only do email, something like that.
Right.
But yeah, generally text is always my best. I've sent 19 texts since we've been in this meeting, and obviously I did not call those people. So that's where I can actually go quickly and get answers for it. I just put my cell phone in there. That's not a work line. That's my direct cell phone. And that thing's always on there. I mean, I generally turn my phone on do not disturb, like around 8 or 9, depending. And I specifically do it. And I tell clients, like, hey, if you're thinking about buying a home and some mortgage related stuff, right when you go to lay down to go to bed, and you just have that weird anxiety where it's going to click for something you forgot or something like that, shoot that text to me. I don't care if it's midnight, 2 a.m. My phone's on do not disturb. You're not going to wake me up. I get it off your chest and then roll over. And I'm not exaggerating. It's like 5 to 10 texts every morning I've woken up since I started saying that. And like, people are just like, LOL, bro. This was on my mind. I'm like, cool, get it off your chest. Like, that way, when I start at 7 a.m. specifically. One, I meet up with realtors and they're like, hey, they want to do a Zoom meeting or go any stuff on that. I always try to schedule 7 to 9. So it's out of the way of any clients, and specifically clients too. But if I don't have that, I'm going back and answering those texts, clearing out my emails. Like, that's my quiet time from like 7 to 9, where I just get a jump start on it, because, I'm going to beat anybody that starts at 9 if I start at 7. So that's how I feel.
Well, Daniel, this has been an amazing hour, man. Thank you so much. Give the brother some digital claps here for all the value that he is dropping. Extremely, extremely appreciated. Daniel is truly, I would not have brought him on here, y'all, if he wasn't top tier. He's a very great communicator. He really, truly, when he says he's going to call a client, he calls that client. And it really makes my job a lot easier to get these folks pre-approved so that I can begin the process showing houses. And if there's any hiccups during the transaction process, he's all over it. And Daniel also helps me with my negotiation with clients, because we run the numbers together, and I say, well, how much closing costs do you think I should ask for that will allow my client to pay as little as possible? And he'll run those numbers exactly and say, well, ask for this amount. I add that to what I think we can get. And it really, truly makes me the value add for the client, ultimately, knowing that the concessions that are given really, truly are going to help them in the purchase process. And so he will help you in any way, shape, form, or fashion, making sure that the numbers work. And if they're not going to work, he's going to let you know. So please be sure to reach out to him. He is a resource. He is part of your team for every agent here. So take advantage of the resources that are around you.